Just a reminder, today's meeting is being recorded.
Hey everybody, this is David Blake with Tuesday Tech Talk. We're going to review some of the different indexes today, and we're also going to take a look at some different ideas on here about how to find some bottom fishing ideas when we're looking for the market to have some oversold bounces in here. What we'll talk about 20-25 minutes, and then we'll open it up to you guys, and we'll talk about individual stocks or industries, targets, anything else that's on your mind about the market. Okay, as we get started today, we're up. We basically made back yesterday's sell-off. We're up about 250 points on the Dow Jones. NASDAQ's up about 39, but the transports are up about 2.25%. They were one of the biggest losers yesterday, so that's good. They didn't quite make a new low. They came close yesterday, that and the Russell also. But anyways, we got started here today. We had the January FOMC meeting getting underway with Fed Chairperson Janet Yellen and the other Federal Reserve presidents talking about the prospects for a future rate hike and what effects it might have on the economy and the stock market. Last week, we had a pretty nice rally when European Central Bank President Mario Draghi settled the market over there and around the globe, assuring that he was going to do whatever it takes to buoy the European economy. And stocks took off. We had the Central Bank of Japan talking about easing their monetary policy, which is also providing a little bit of a boost to the Asian markets until last night. Last night we had a pretty nice sell-off in China's Shanghai index. It was down about 6.5%, kind of wiped, 6.5%, basically wiped out the 2015, 2014 gains. But despite that, we still have a rally today because we had a little bit of a jump in oil again today, which is good. We're trying to hold that $30 level, and I think if oil can do that after bouncing off that $26 to $28 level that we had targeted here the last couple of weeks, I think that'll help the market have a little bit of a boost at this point. Now I would expect to see oil consolidate in this area between, say, 30 and 32. You may get some spikes up to 34 if the guys that are short oil get a little bit nervous. But consolidation at this point would be good for the market, and I think that can help us get a little boost over here over the next couple of weeks. Today or tomorrow, when Yellen comes out with her statement, basically what I think what she needs to do is basically just assure the market that rates will remain low for an extended period of time. She also needs to sound like she has to come off with knowing that she didn't make a mistake in December by raising rates. And I think if she comes off sounding a little bit hesitant or that they're not sure what they were doing, we could get a little bit of a sell-off. But I think she'll deliver. She's been pretty dovish and good for the market in general. So I think maybe we get today. We'll probably get some carryover tomorrow with a bounce, and that can give us a little bit of a rally going forward. So I want to take a look first at the Dow Jones. As you can see over here, last Wednesday we had wasn't quite a capitulation low, but it was close. At the bottom we had about 90% declining volume. Declining to advancing issues were about 9 to 1. And what you have on this thing here is basically it's called a hammer. It's not textbook hammer, but a hammer candlestick. And what that means is you have a pretty good sell-off, and you kind of exhaust the sellers over here at the bottom. Then buyers decide that that's probably a good place to come in, and they take it up. Now, ideally, you'd like to see a green top to that, showing that you actually were able to go profitable. I think the Dow was still down about 200 points that day. But we did get a follow-through the next day, which went higher. Now we're getting some consolidation. We have some resistance up here around 16.1, 16.135, which is basically where we're at right now. But if we can get another boost tomorrow, you've got some pretty wide open grass in here. I think you may get a run as far as maybe even around the 17,000 area. That would probably be exhaust itself right around that, and then we kind of see what happens with the broader market from there. But again, the CTI that we talked about last week goes bullish at the end of this week, as long as we stay above that 15,450, which is about 500 points away right now, or 600 points away. So I feel pretty confident that we will be flipping and going bullish for about the next 5 or 6 weeks with the CTI. Okay, here's the Standard & Poor's yesterday. It has an even a better looking hammer on that. That's a bottoming pattern, reversal pattern. The hammer here shows the capitulation selling coming in. The buyers took over, and it has a smaller a candle on a body on it. This is called the wick that comes down here. This is the body. Then we had an outside day, which is also confirms the hammer, and we're consolidating in here. I think that the S&P today is right now struggling to get past this 1900 area, which is right over in here. But if we get through that, I think you can probably see a run up to about 1950. If we really get some headway going, you could probably come up here and if you draw a line going across this 2000 area, I think right around this area, this is called polarity in a market. When what was support becomes resistance, you maybe get a run up here into the 2000 area, which would be about 600 or 700 points for the Dow. So that's a real possibility at this point if we get the right wording tomorrow. Okay, the NASDAQ, again, you had the capitulation over here. In this case, you did end up higher. It closed at the highs of the day on the NASDAQ from last Wednesday. Had a little spinning top here, which is a little bit of indecision. But then you had a gap higher from there, and we're higher today by another 40 points at around 45.58. So we're up right back up here at this resistance level. But if we can pop through this area right here, I think you can get another run up to around 47.50, maybe 4800 on the NASDAQ, which would maybe a place where you want to lighten up again. Okay. Now, the last two charts we're going to look at, we had the capitulation again on the Russell 2000, which, of course, we're already in a bear market on the Russell 2000, but we made the run up here to around the 1020 area. Today we're at 1014. We break through this 1020. I think we can get a pretty good run in this. So the small caps are definitely underperforming, but if they can get some momentum behind them, we could get a run up here around 1080, which would be back here by the September lows back here. So that could carry us another 60 points or so on the Russell. The transports, they came down yesterday. They did hold the lows from last week, and we have, like I say, we have about a 2% run in there with 67.90. So we're trying to put in the bottom on there, I think. Here's the stochastic that we look at, which is kind of a momentum follower for longer term. We're at about 25, and you see this come up around 50. That would confirm that we are certainly going higher at this point. Okay, right now, so we've had some reversal patterns in place. We have the oil possibly stabilizing around the $30 level. We've got easy money from the foreign central banks. Most likely dovish rhetoric coming out of tomorrow's FOMC meeting and all, and I think that's what's going to provide the spark for us to have a pretty good couple of weeks here going forward. The major trend is still lower, but I think there's some opportunities here to buy some of these beaten up sectors and even trade oil. I know one of the things we've talked about in the past was buying the ETF called USO. We can look at the chart on that later, but it's having moves of anywhere from 5 to 10% a day up and down. So if you can buy that thing right now, we're at about 907. If you can get that thing closer to 8 on a weak oil day, you can probably pick yourself up $1 or $2 on a pretty cheap stock. Okay, I want to share some ways that we're going to use here for that I will use to try to find some bottom fishing stocks, and how we can pick up some short-term trades on that. The first thing we're going to look at is for trading. Looking for the sectors where you want to be, what to buy. Okay, first of all, we want to find out the sectors that have outperformed the Dow while we're selling off. In this case, I've found 5 of them that I've looked at. We have, let's see, give me papers here in front of me. Okay, the sectors that have outperformed the Dow's off about 8.84%. The NASDAQ's down almost 10% over the last month. S&P's down about 8%. Russell 2000's off 12%. But the utility sector is actually profitable over the last 30 days. It's up almost 1%. And the other sectors that are have outperformed, not by much, but they still have. And that's the consumer staples sector, which is a defensive sector. Healthcare is only off about 7%. Consumer discretionary sector is off about 7.5%. And the technology sector is off about 7.8%. But I would add that because of the weakness in the small caps, if you just looked at the big cap tech stocks, you're doing much better than a 7.8% pullback. So here we have a chart of the utility sector. You can see it's kind of forming a little bit of a triangle here, a little bit of a wedge. A break above 44 could give you some more upside. I don't necessarily think this is where you're going to find your short-term pops. But if you're looking to add some positions that have been beaten up a little bit, and you're looking for some dividends, you can find some nice-looking charts on here. Now, here's one that I looked at. It's called Canadian. Let's see. Hold on one second. Okay. When you look at the top industries on Market Edge, 2 of the strongest industries are water companies and gas companies. And we'll take a look at industry groups here in a little bit longer. But anyway, this first chart is one of Connecticut Water Service. It's CTWS is the symbol on that. It's paying about 2.65% dividend. You see it's got a nice little breakout over here, moving steady. Look at the accumulation. Has gone from about 0.8 to over 2. That shows that a lot of institutional buyers are coming in here. Again, it's a defensive sector. If the market rolls over, you're not going to get hurt buying in this sector. And we had the 30-day stochastic that I like is up here over 80. That means the momentum is very positive on that. Another one in the water companies is California Water Service. Again, you have a nice little trend line coming up from here. You have the 50-day moving average has just crossed through the 200-day moving average. Has a little bit of resistance up here around the $24 area. And actually, this thing actually shows up as a point and figure early alert. If it breaks through this area, you'll probably get a pop up here into the 25 stuff. But again, it may not get the quick pop in here, but the California Water Supply is paying about a 2.81% dividend also. A nice place, nice way to get paid while you're waiting. Okay, now as far as the gas companies go, I think we can get a boost here. Here's one. It's also the first or second strongest industry group that we have right now, the 91 that we follow. A nice upward trend line. The 50-day is way above the 200 here. Nice accumulation under it. And I think this stock, it's called One Gas. OGS is the symbol. And it's paying you about 2.66%. Another one here is called, I think it's NiSource or NiSource. The symbol on this is NI. And this one is actually paying 3.06%. Nice little chart, kind of having some consolidation of this big run-up over here. Finding support of the 50-day. Not as much accumulation in that, but I think it's one that you can hold on to. I think the gas companies, if we get some colder weather here, like we got in Northwest, that can add a little bit of a boost here. This one's called Northwest Natural Gas. The symbol on this is NGW, I think, natural gas. So this one's paying actually 3.7%. It's had a nice run up here, bouncing off the 50-day all the way up. A little bit of consolidation over here off the gains. Good accumulation, steady on that, and almost 4% dividend is probably one that you could look at as a place to go into. Okay, the next sector we're going to look at that I like was consumer staples. It's outperformed XLP. If you follow that, the up-down ratio still looks under accumulation. We actually made a new high back in December, a 52-week high in that. Considering that it's off about 3.5% at this stage, but still is far outperforming the Dow, being down 8%. So in the consumer staples, if you look at the Market Edge Industry Group again, Some of the industries in this sector include that are still strong include tobacco, food, beverages. All of these have a relative strength. If you go on there of 1.05 or higher, I think tobacco is actually about 1.09. But some of the stocks in this that here it is on the industry group analysis. If you pop up here, you get all the groups. Click on this on the relative strength all the way to the far right-hand side. You're going to see water utilities is the strongest industry that we follow right now, followed by gas companies. Then you have toys, which is weak, but it still is outperforming the Dow by about 10%. And you have tobacco, real estate investment trusts. Here's food, electric utilities. Then you come down here with retailers, apparel, restaurants, and beverages, footwear. These are places where the industries that the ones that sell off the most are the ones where you want to go into. They're going to get the biggest bounce. You don't always, you may want to think that okay, I want to get the beaten up industries and sectors. That's not usually the case. They're not going to outperform on the way up if they underperformed on the way down. But this will give you a couple ideas for what industries you want to look at for buying things. Okay, in the tobacco industry, here's a nice chart. It's let's see, Reynolds Group. RAI is the symbol on here. Kind of a sideways consolidation over here, playing around the 50-day. Another great dividend, 3.11%. Kind of, like I say, it's consolidating these gains from about last October on. But it might be one that you're starting to see some more accumulation in that. Again, a defensive sector, defensive stock. People seem to keep smoking once things slow down. Here's Altria Group. The ticker here is MO. It's going to pay you about 3.88%, chugging along the 50-day moving average, which is still staying above the 200-day moving average. Accumulation is not as strong in here, but you are having, the relative strength is staying bullish on that. I think you're not going to get hurt in this thing. If the market would pull back, which I think we've already had the pullback on this. It might get a little bit cheaper, but I'd look for this thing probably to work its way a little bit higher. Another tobacco stock, not quite as good looking as Philip Morris. The symbol on this is PM. It's paying you almost 5%, 4.7%, trying to hold on to the 50-day. But if you can buy this thing down here around $85, $86 a range, I think you can get, you're going to do well on that. Although you have had some selling off in here, but even despite that selling, the stock's trading sideways. Okay. In the food group, here's Campbell Soup Company. I think it also pays a 2+ dividend. Has bounced off its 50-day in here and breaking out almost to new highs here. The accumulation looks steady, nothing great, but relative strength is bullish. Even here's Kellogg's. Kellogg's had a bounce off the lows back here in August. Had a nice run, and again, we made a new high back in right around the first of the year, consolidated above the 50-day moving average. This is one that I think you could you may want to own. That probably pays a good dividend also. Even some of the going back here, some of the other stocks like grocery stocks. I know Kroger has looked well. You can look at some of the other food store stocks. It would be a place to go. Okay, another defensive sector is the healthcare sector. It's outperformed the NASDAQ and the Dow Jones. Again, if you're looking for some dividends, the big drug stocks are always paying around 2.5%, 3.5%. I didn't pull any of these charts up, but I know Bristol Myers had a pretty good-looking chart. You might look at Pfizer, some of those, even Merck possibly. But you've also had a little bit of a pickup the last week or two in IBB, which is the iShares NASDAQ Biotech Industry, or ETF. You've had quite a sell-off in this thing. It's not the greatest looking chart, but after the sell-off last week, you're kind of consolidating the gains over here. I think if you have some of the bigger name biotech stocks, I know we talked about Celgene and some of the other ones, I think if you're wanting to buy some of those, I think you can get a pop in that from here over the next couple of weeks. Again, if you get some of those will jump up here around above 300 or so, you'd have a nice trade on your biotech stocks. I wouldn't go all in, but I do think you're going to get a decent bounce in this defensive sector. Okay, next we have the consumer discretionary sector. Again, you had a nice hammer over here. on the sell-off last Wednesday. We've had a couple gap up days. The consumer discretionary sector, it made a new 52-week high back in November, and then it came back here and actually took out the September lows. Remember we talked about the ETS, how that day in August they kind of opened up without a bid, so you're not sure exactly what the real low was, but we came close to at least having a double bottom, I think, in the consumer discretionary sector. You want to be a little bit more selective on this. We had quite a drop over here in January after it was outperforming a lot back here. It was, names like Home Depot and Lowe's and all Ulta salons. But this fallback was because a lot of people were concerned about the Christmas holiday sales. They didn't do well, but if you can find the stocks in here that have done a little bit better, I think you can get a nice pop in some of these. Now, here's in the industry group. If you look at retailers apparel, which is one of the industries in consumer discretionary, you can find some stocks in here that have some nice charts. You see a nice bottoming pattern in this versus the pullback in the S&P 500. And this will give you the list of the strongest stocks in that particular industry. In this case, we'll take a look at a couple of these charts. Here's Children's Place. The symbol is PLCE. You've got quite a bounce off here up this 48 to about 64, kind of consolidating that little run over here. You've retraced more than 50% of the sell-off, which means when that happens on a quick time period, a lot of times this will actually retrace the whole amount once you've crossed over that 61.8% retracement, which you have. And look at the accumulation in here. You're down here around 0.5. The up-down ratio now is up over here around 1.5. That's a lot of buying going into this stock. It is a little bit overstretched. The 30-day stochastic is showing everything looks fine in that. But you might want to wait for a little bit of a pullback to the support area in here. If you get that, it'd be an ideal place to go. And later on, you're going to see that this stock is also showing up in the point and figure early alert area, which we'll look at as also looking for bottom candidates. Okay, here's Lululemon athletic wear. They had a little bit of a selling off here. I didn't notice this before, but you actually have kind of a inverse head and shoulders, which would, since you've already broken that neckline, you should get a run in this thing up to about 64 or so, 64, 65, based on that inverse head and shoulders pattern. What's this doing today? We're actually it's up $1.15 over here. It's up 2%. You're up around 58 and change. So you're up here again, getting ready to break through that 200-day moving average. That would be a plus. It could give you another pop. There's other ones right on here. Here's a retailer specialty. Now, we talked a couple weeks ago on maybe wanting to take some profits in Home Depot and Costco, Lowe's. Some of these stocks that have had, they had a great run up 25, 30% or so. Now you're seeing a little bit different stocks leading the way. I certainly wouldn't, sell Home Depot after this pullback or Costco. But if you did sell some covered calls or things like that, I certainly would. I don't want to chase anything because they're a little bit stretched. But these things pull back a little bit more. You want to buy those. But here, Dollar General, Sportsman's Warehouse, are a couple stocks that are rated long. Look at the charts over here. Here's Dollar General, big pullback over here. But now we're coming up here, battling the 200-day around 72. You get a pop above this 74. You're probably going to retrace this whole move, which would put Dollar General back up here around $80. Sportsman's Warehouse, I'm not really familiar with this company, but it's got a decent-looking chart over here under accumulation. 14-day RSI is going bullish. You're staying above the 50 and the 200. And you also have, you came down here, found support at the from this level. You bounced off of it. And again, I think you'll probably, it's a cheap stock. You've retraced already 61.8% of this pullback. That means you're probably going to get another run to the old highs on that one. The symbol on Sportsman's Warehouse, I believe, is SPWH. Okay, now the last sector we want to look at for looking for ideas. And again, this one you want to be a little bit more selective because you want to limit this probably to the large cap names. The Facebook, the Netflix, Microsoft, probably even Apple in here. I think Apple's due for a bounce back in this area. had that run down to 94, and I think we're back over 100 at this point. But this sector also made a new 52-week high back in November, I believe. We sold off with the overall market in 2006. A lot of semiconductors came down. You had Intel trade down from about 33, 34 to about 28 or so. Stocks like that you might want to look at for a bounce at this point. This should at least have a run back up here around the 42. But again, you probably want to limit this to the bigger name stocks. Okay. So before we get to your questions, I want to go onto the site briefly. I want to show you a couple steps that you can use to find some bottom fishing ideas. First thing you want to do, if you click on Trading Ideas, we have a drop down there called Prime Ideas. That will actually give you a list of stocks that are early entry buys, which means it's kind of basing a little bit, and it will give you a price to enter these stocks when you go into it. Here's it is. Here's Trading Ideas. Here's Prime Ideas. You get bottom fishing. If you pull this up, we have you can report output. You want to include the power rating and the relative strength when you're sorting through these lists. That way, when you click on relative strength, you'll find the strongest bottom stocks on here. In this case, you have C-SPAN, Info Systems, Intel, Correction Core, which might be in the defense section. But here's Finish Line, which is one of the specialty retailers, or maybe even apparel, I'm not sure. But what you want to do is you want to go in here. You can look at the charts. Here's that Correction Core, kind of put in a bottoming thing in here. Up-down ratio is steadily moving up. The stochastics are looking like they're positive, and you're positive on your 14-day RSI. Finish Line, not quite as good a looking chart, but you have kind of tested the bottom down here around 15, 16, 3 times now. After that gap down, you closed the gap, which is bullish. I think you can probably get, again, your under accumulation down here. You've gone from below 1 to around 1 something on the up-down ratio, which is good. Stochastic oscillator up here around 80. You just got some good positive momentum. You could probably get a breakout in this area, maybe 17, 18 up to around the $20 area. Okay, and here's I got a couple questions that came in. Okay, hold on. Before I get to this, we also have another place that I wanted to touch base on called in the advanced tools, and that is point and figure early alerts. Let me see if I have this screen or not. No, I don't. Okay, I'll look at that in a second. But anyway, if you go into point and figure early alerts, it's going to give you a list of stocks that are poised to break out today. It gives you the breakout price. What you can do if you're trying to buy some of those stocks, you can actually put a buy ticket in when you see what stocks are getting ready to break out. Put your buy ticket in maybe a nickel above where the breakout price is, and that way, if it doesn't break out, you don't buy it, but you're in with the buy ticket as soon as the breakout occurs. So that's one that you want to look at. And in fact, when I looked at that this morning, sorry for not making a slide out of it. There were food stocks in the point and figure early alerts. You had some utility stocks in there, including AEP. You had toys. You had Mattel. You had retail specialty stocks in there. And that when you get that point and figure early alert list, if you take that and then screen it again off of the industry groups that are outperforming and possibly are strong and improving, you'll narrow that list from maybe 20, 25 stocks down to maybe 7 or 8. And it actually allows you truly are finding the strongest stocks in the strongest industries. So that's something I want you to look at. Okay, some of the questions I want to get to before we open it up here. Somebody wanted me to look at the home construction industry, and there's not a lot to like on this right at the moment. As you can see, most stocks we have an avoid on. You have a couple on here. This Hovnanian Enterprises, HUV, is an early entry buy, which may be coming around. But if you look at some of the charts on this, here's Lennar Corporation, which we wanted to look at. LEN was the symbol from the low here in August up to the highs that we made in, actually that's August of 2014. This is a 2-year chart. We've already retraced 61.8% of the move down here, and you're running a little bit of resistance again up at this level. You're probably you're probably going to come back down here and break into the high 30s on Lennar Group. I don't see any accumulation in that. In fact, you're pretty steady. That's pretty steady down on this thing, showing the distribution still. So I wouldn't be. I'm not sure you're going to find a bottom on those. But if you can get down here around 39 or 38, you might nibble away if you like that industry group. But I don't see that thing, trying to find the bottom at this stage. Here's another one you asked me to look at, KB Homes. Again, you're kind of working your way, lower lows, lower highs. You got a little bit of a capitulation last week, which maybe maybe you're trying to find a bottom in this area around in the tens. Keep your eye on that support level. If you are going to buy this in here and just try to kind of front run everything, watch these support levels in here. Break below that, you don't want to be in there. Okay, this is American Electric Power, AEP, good dividend, electric utility. Again, that's one of that was the third or fourth best performing industry that we have. I guess somebody may look at this and go, here's an inverted head and shoulders. Not so sure about that. But you've had a nice gain. The 50 days pointed up. RSI is looking bullish. You are under accumulation. Nice dividend. This actually, AEP, actually also shows up on that point and figure early alert. I'm not sure what the price was, but you're getting ready to have a double or triple top breakout on that, which would probably spring this thing a little bit higher. So that's one that, again, if you go to that point and figure early alert thing, find the stocks that are strong, this would show up on that. Okay, the other one was Southern Company. Again, a nice dividend, great accumulation down here off of the lows, actually since midsummer. You've had a nice increase in accumulation on that, positive RSI. 30-day stochastic is up here above 80. I like it. Supported in here, consolidating this little bit of a rise. I don't think you're going to get hurt, especially for the longer term. The utilities, you don't really trade for a pop in the market, but certainly these are stocks that for a defensive trade longer term. I think that you can own. Okay, that's pretty much. Wait, I had one more thing here. Somebody asked me about being short right now. No, you're not looking to short these rallies yet, because I think you're going to get you possibly get 500, 600, 700 point rally in here, and the CTI is actually staying bullish for the next 5 or 6 weeks. So I think this probably has some room to run, like we talked about a little bit earlier. You have a lot of influx of, like I said, central banks. You're probably going to get another bounce tomorrow with our federal FOMC meeting minutes, and then again, if oil can find a balance in here, that's going to be bullish. That could provide the trigger for us to get a little bit of a bounce. One last question before we open it up to your questions. Somebody asked, why is the CTI going to a buy while the second opinion is a void? That's actually a very good question. But second opinion is a trend-following model. And what it does is we go to a buy over here because things are looking up. We're in an upward trend. However, but the CTI looks at cycles in business cycles, and the business cycle, the way the market's trading, trades off of new lows, kind of follows impulses in the market, and it's a forecasting model, and so we use that for what to expect going forward, whether we're going to find periods of a market being in an up cycle versus a down cycle, and it allows you to probably position yourself a little bit more, thinking like what we're doing right now. Okay, we're up 300 points now. Allows you that we're going to be forward. So the CTI has been bearish all year long, but again, we're going to pick it up. Maybe we should have changed last week, but we did make that new low last week, and the discipline of the CTI means we only flip it on the following Friday after we hold the lows. So while we were up about 800 points on this last call or more, we've given back about 400 points. But that's for trading, and again, it's just telling you that you want to keep your long positions. Okay, I want to close this off right now. Go over to the regular site, see if we can share the screen for a little bit. See if we have any questions coming in. Let me do this over here. I'll share the screen while we while I wait for some questions. Okay, we're ready over here. Anybody have any questions? Okay, we got somebody from JP Morgan. Okay, I'm not real big on the financials in here, but boy, are they oversold. Okay, here we go. Maybe. Yeah, the smart chart's not really loading very good in here today. Yeah, that's what I was afraid of. Let me see. Okay, here's JP Morgan. Quite a sell-off. I mean, you've gone over here. You're still looking bad. The XLF is one of the weakest, the third weakest sector in the whole market. So I'm not looking for anything for any short-term bounces in the banks, especially if tomorrow comes in and the Federal Reserve again talks down that we're going to keep interest rates low for an extended period of time, which she has to do, so this doesn't shake the market up. The financials aren't going to be where you want to be at that point. When they start talking about maybe tightening, that's where you want to go. Although if you do go out some of these time frames on these stocks, I mean, you're back here almost where you were in May of 2014 on JP Morgan. Bank of America down here almost in the 12s. They sure are tempting. And down here with JP Morgan, if you can get them here maybe just for a long-term hold, they're cheap enough that I think you can, if you like them, even going out 3 years, this is telling you might see $50 on this thing. Down in this area, the low 50s, you might just want to nibble away and buy like a half a position, then hold on to it for longer term. Then you see the thing, if it comes back lower, you can add to your half position at that point. But I'm not looking for the banks to give a sharp bounce at this point, especially when you have when we're talking interest rates down. Any other questions? Okay, how about MMM? Okay, MMM is in a sector, number one, what we've just talked about. That's probably not a sector that you want to be into. It's like the fourth worst sector at this stage. The industrials. The problem with industrials is the strength in the dollar. If you can find one of these companies that you find something in here that you can't get these things to load. Here we go. Here's 3M. But if you can find an industrial that gets a lot of their business around, in the States, you're okay. 3M, boy, if it breaks below this 135, you could be in trouble. I don't like the accumulation over here. You're under distribution over here. Again, you want to watch this thing. If it breaks this, and 130 is your next target, and I don't know. This is one that you want to play for a short-term bounce. Again, the CTI is only staying bullish for about 5-6 weeks, so I don't see this next run as one that we're going to go into to make new highs or anything like that. But it's going to be a very tradable bounce. Okay, assuming a bounce, what's your number one pick? I don't know. I do kind of like I have like some of these some of the oil stocks. I'm nibbling away, especially whenever we talked about that $26 to $28 range. Looks good as long as we can get some stabilization in this $30 range. It looks good. I've traded that USO, which is just an ETF that for a cheap stock you can get in and out. But I've been trading Facebook a little bit in here. Some of these big name tech stocks. If we get a 500 or 600 point bounce in there, I think you can pick up some of the big name tech stocks, including the FANG stocks, and make $3, $4, $5, $6 a share on those things over the next couple of weeks. Starbucks and KR. Okay, let's look at both of those. Starbucks. We talked about this the other week, that we would buy a pullback to around 55. Let's see. I think we got that. Here we are. Let's go to the time frame, 1 year. Okay, yeah, we got down here on that capitulation low. We got down to right to about 55. That would have been a great buy. And I like Starbucks bouncing off of this off the 200-day moving average. It is on a distribution all through this period, which is a little troubling. I think you probably get a pop in Starbucks. Again, you want to watch that 200-day moving average as a support. What's it doing today? We're up a buck today, 58.70. So, we're kind of consolidating this right in here. You want to keep an eye on that 200-day and also the support level on that, and where you want to go. We have an avoid on the stock because you have a downward trend line on the thing where it's going to run into resistance up here around 60. It's got to get through 60 before you're really going to get more motion out of that. Okay, KR, I believe, was what, Kroger? Kroger's in wow, he had a nice pullback in that thing. Kroger actually was one of the stocks that I think you can probably get another bounce in here. You have some accumulation on here. It's very oversold. RSI is down here around 18. Again, keep your eye on this. You have 1, 2, 3, 4, almost 5 times testing this $36 range. If that breaks through 36, you don't want to be in it. But if you're looking for something that's very oversold, that's in a sector that actually is decent, Kroger might be one you could get a bounce on. Today, Kroger it's up. Well, it's about 12. You're not getting much of a bounce on that today at 36 and change. So I don't think I want to play Kroger for a quick bounce yet. You want to make sure it holds here, and maybe if it can get back up above 38 and change, maybe you can get some action out of that. But it's kind of walking the tight line right here. Okay, for tech stocks, what might happen? What might want to see at the end of today is a positive indicator. What you want to see happen at the end of the day is you want to see this 285-point run hold. You don't want to see these rallies come up 200, 250 points and then end up 50 for the day. The NASDAQ composite up 53 points, 1.22%. The Russell being up over 2%. The transport's up over 2%. That's what you want to see. You want to keep your eye on that, on the Russell and the transports, because they can outperform the other markets going forward. That's going to be good for the broader market, and that's also it would keep the Dow. If the Dow breaks down below this 450 area, we're going much lower. So at this stage, play the bounce to the upside, and we'll see how we go. If rates lower for longer, what about HRT and NLY REITs? I think the REITs, if you have a good positive, if you have one that it's not on a steady downturn, you can buy that. I know that NLY pays a heck of a dividend. What is it, Neely or Nally, something like that. HRT, I'm not familiar with. Let me see. And we're going to have to wrap this up. If you give me some more questions, if you want to give me some, we don't follow HRT, so I don't know that one. But the Nally, NLY, I know it pays a great dividend. It's struggled over here, but the REITs, as long as the rates are low, maybe some places that you want to nibble away. Somebody else asked about some of the MLPs in here. As long as oil stays at $30 a barrel, or between say 28 and 30, I think maybe you can play some bounces. But the thing about oil, just remember this: okay, starting this week, you have Iran coming on board with their oil. They haven't been able to sell it. To them, $20 is better than nothing. So it doesn't matter to them whether it's trading at $35 or $40 a barrel. They want money. They need the money. And also, you had Iraq last month. Actually, they had their highest production month ever. So I'm not looking to buy oil rallies in here that thinking it's going to $35 to $40. So if you can get up around, you might be able to get some trades up to the $32 to $34 range, which would give a nice boost to some of these oil stocks. But the longer term, picture on that is a little bit tough. Okay, one last one, CMG. This is going to be the last one we look at because we've gone 45 minutes. I don't like to go that long. I don't want to all get bored here. The CMG is Chipotle. Okay. Well, a nice bounce off of this. You know, some of these stocks that have these big runs, they go from 50 to 750. Once they correct, and this thing's corrected, what, almost 50%? If you look at the Fibonacci things on this thing, if it truly bottomed right there, okay, you're gonna, your first resistance is kind of where it found support. Amazing how these Fibonacci things come in. You actually find that's where they pause on the way down. You could probably get a bump up into that area. We're up 460 today to 446, so we're still over in this area here. You could break above 480, you'll get a run probably into the thing. But again, you're catching kind of a falling knife on here. They certainly can't afford to have any more bad news. So again, I'm going to wrap it up with this. If you have some stocks that you want us to look at for next week, please try to get them into the doc at marketedge.com, and we're going to wrap it up with that. Thanks for attending, and have a good week.